Would you believe Ghana could save over $10 billion a year if one refinery starts working again? Stick with me, because this one move could change the money game in Ghana and show you how to spot investment opportunities even if you've never done stocks before. Welcome to the Investment Nerds, your personal guide to investing in the African stock market. The Ghanaian government is reviving the Tema Oil Refinery, TOR, to restart crude oil refining operations by the end of this year. The goal, to slash the country's annual $10.2 billion oil import bill. Target, the refinery will meet about 60% of local crude oil consumption, which could save around $400 million a month in import costs. When Ghana spends less on imports, especially big amounts like billions of dollars, it conserves foreign currency, helps the Ghana cedi hold value, and improves overall economic stability. Better energy, fuel security, less dependence on foreign oil means less risk of price shocks that hit businesses and consumers, including companies listed on the stock market. A strong economy plus stable currency equals better environment for investments. The refinery revival is a big economy signal. For companies in the oil, refining, energy, transport, manufacturing sectors, this could mean opportunities because cheaper fuel and reliable supply reduce their costs. Refinery, a factory that turns crude oil, raw oil, into usable products like petrol, diesel, etc. Import. Bill. How much money the country spends buying goods, here oil, from other countries. Foreign exchange, forex. Money in foreign currency, dollars, euros, etc., used for international trade. If you save dollars instead of cedis, that's foreign exchange. Consumption, how much of something, here, crude oil, gets used locally. Economic stability, when things like inflation, currency value, and business environment are predictable and not chaotic. If you're looking at companies in Ghana's energy sector, manufacturing, transportation, or even agriculture, which relies on fuel, this is a positive tailwind. A country reducing large import bills might free up more funds for infrastructure, business, and growth, creating more investment opportunities. But these are macro signals, big picture indicators. They don't guarantee a particular stock goes up. You also need to check company-specific financials, management, etc. For beginners, this is a moment to watch more closely rather than jump in blindly. Use this news to build awareness of how national economics affect investing. Always do your own research or talk to a licensed financial advisor before investing your money. Now that you understand what the TOR deal is about, would you consider investing in the oil sector? Share with friends who need to hear this.